Let's just talk about the price cuts in Tesla, down another 4%, as you're noting in your notes to us, down about 19-20% year to date. They're leading the pack here, and they got a little bit of room to run. Just wondering how long they can keep this up.
Yeah, I mean, they're in a unique position, right? Because they have kind of the best cost structure, right? They don't advertise, they don't have dealerships. So I think they have the ability to cut prices more than a lot of their competitors. They're also obviously earlier to EVs than others. So it's a great way to really steal market share, I think. And ultimately, they also have a lot of things that kind of go in their favor. They're the biggest beneficiaries of the IRA tax credits this year. And also two of their plants, Berlin and Austin, are really ramping up, and those are going to reduce costs over time. So, yeah, I mean, it looks like a big headline, right? Cutting pricing by like 20% for some of the models. It sounds pretty dramatic, but when you really look at how they can lower costs, it's really a great way for them to gain market share. There will be some near-term pressure on profitability, no doubt, but I think the market really understands this.
2022 was a rather challenging year for the world's major automakers. The supply chain disruption made it hard to produce enough vehicles to meet demand. The cost of production has since been unstable, and this may linger throughout this year. Therefore, automakers may need to change their strategy for production if they want to keep making a profit. Analysts like Tony Seba have said that EV prices will continue to drop through the decade. While this seems logical and expected, considering the number of electric vehicles being released into the market, the story was a little bit different last year, as electric car prices soared so high that analysts had to begin questioning the expected transitioning to EVs. What lies ahead for EVs, and are EVs really ready for the auto industry and its future? Well, you're going to find out in this video. Hey guys, welcome back to Tesla Tomorrow. EV prices rose significantly in 2022. Only a few months ago, EV buyers were forced into long waiting lists, and dealers marked up sticker prices by thousands of dollars. Used electric vehicles sometimes sold for more than new ones because buyers were willing to pay a premium to get one right away. At the end of 2022, the average price of an electric vehicle was $61,488, compared with $49,507 for all passenger cars and trucks. However, seemingly interestingly enough though, lithium prices are beginning to drop, and this will most likely give room for drops in the prices of electric vehicles. As of February, the price of lithium used in batteries has fallen 20% from its peak back in November, although the metal still costs more than twice as much as it did at the end of 2021. New lithium mines are beginning to produce ore, and this could keep a lid on prices. Tesla's vehicles are currently selling for lower prices, and could be cheaper if the cost of lithium does go down. Brian Moody, executive editor for Kelley Blue Book, stated that Tesla saw the increasing competition in the market, and then took advantage of the opportunity. He added that if the number one seller of a certain type of car raises or reduces their prices, then it's going to have an impact on the average. But do cheaper prices really translate to more sales for Tesla? Well, let's find out. But before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on that notification bell to keep up to date with everything going on with Tesla. Despite a significant increase in electric models from other automakers, Tesla has been able to maintain a 60 to 70% market share. However, there are reports that Tesla's share of the US EV market is declining as competitors are taking over. Tesla's EV share in the United States subsequently fell from nearly 3/4 of the market in January 2022 to just over half a year later. Within that same time frame, GM's EV market share grew from 0.1 to 9.9%, and Ford's foothold grew to 8.4%. Recent reports claim that Tesla's domination in the EV market in the US is cooling down because of registration numbers coming for January and February. They base this on Tesla having 95,829 new US registrations for the 2 months, a massive 35% increase over the same period last year. The report notes that the automaker now holds a 58% share of the EV market in the US, despite the increase in deliveries. It is attributing this decline in market share to competitors ramping up EV sales, which is partly true. Traditional automakers like Ford, General Motors, and Nissan are all gunning for Tesla's dominance and lucrative profit margins. Older automakers known for their gas-powered rides are ramping up their push into the EV market with edgy new styles and attractive specs. S&P Global estimates the EV market will grow from just over 50 models today to 78 by year end, before more than doubling to 160 by the end of 2025. S&P Global Mobility's analyst Tom Libby also said that competitive pressure is pushing OEMs to move quickly, and that Tesla's market share will keep declining as a result. Despite some upbeat outlooks from Wall Street on price cuts and the fact that Tesla stock has been a favorite among investors since the start of the year, shares are still off more than 40% in the past 12 months. There's a much starker decline in competitors like Ford and General Motors, with respective one-year drop-offs of 14 and 10%. Although Tesla still plans to launch newer vehicles, there are no dates for the release of most of these EVs. Tesla's Cybertruck is not on the market yet, and the car company is reportedly working on a compact EV, dubbed the Model 2, which does not have a clear timeframe for its arrival. More EV models are coming into the market, and many of them are not Teslas. German vehicle manufacturer Volkswagen is pulling the cover off its ID.7 flagship EV that aims to bring the sedan to limelight. Volkswagen is still keeping some key details of this vehicle under wraps, and the selling price is yet to be made public. Sales of the ID.7 will start in China later this year, followed by the US next year. And there are already speculations going around that the ID.7 can dethrone the Tesla Model 3 as one of the top-selling EVs in the world. The average electric car from automakers like GM, Ford, and Hyundai are now bridging this gap, and they've got the range to beat Tesla. These car companies are even catching up on the software side, directing billions of dollars to new features like hands-free driving and batteries built for performance. However, as a pure-play electric automaker, Tesla shouldn't be valued in the same way as traditional car companies who are recently just transitioning to the technology. These companies will likely replace their existing gas-powered lineups with EV alternatives, while Tesla enjoys pure growth. Likewise, Elon Musk has the intention of capturing a significantly large scale of this American SUV market, as seen by Tesla's 6th price decrease this year. Last year, Tesla's Model Y was one of the top 3 best-selling sport utility vehicles in the United States. It was impressive given that the Model Y's starting price was more than double that of the market's longtime favorites, the Toyota RAV4 and the Honda CR-V. Interestingly, this pricing barrier has actually been lowered after Tesla reduced the base price of the Model Y by 24% since January, the most of any of its vehicles. Furthermore, Model Y is now eligible for a $7,500 in federal tax credits at the first time ever. Taking into consideration an all-wheel drive Tesla SUV with a range of 279 miles can actually be purchased now for 10% less than the average price of a new car sold in the United States. The pressure on Tesla is one of the key factors forcing the car maker to slash prices. Tesla marked down its vehicles for the 5th time this year, its latest efforts to boost demand and regain lost market share. The CEO of Renault also stated that Tesla's recent wave of price cuts could be seen as a warning for rival electric vehicle makers. Renault's sales rose by 9% in the first quarter of the year, suggesting that the company has made efforts to restructure and focus on its most profitable models, and it might be working. While Renault's current strategy is paying off after 4 years of declining revenue, Tesla's price cuts are still pushing the automaker to closely examine its pricing strategies globally. They also shared Renault's stance on its pricing, stating that the company will analyze, country by country, market by market, which level of competitiveness it needs in order to stay in the match. He stated that it's clear that Tesla cutting prices is a challenge, and this is a warning that the company is looking at. On the other hand, the relative underperformance of Tesla's stock proves that some investors are still looking at the relevant price cuts and supposed quarterly delivery miss as a sign of trouble ahead for the electric vehicle maker, and maybe a sign that Tesla is losing a grip on the industry it once dominated for the last 5 years. Do you think Tesla's price cuts will keep driving sales? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.